Oil loss deepens as U.S. recession fears grow. Weekly data delayed. Fed Chair Jerome Powell reiterates the central bank has no rationale to crash the U.S. financial system. But the price hikes it's threatening investors with aren't giving any consolation to the oil marketplace, which deepened its losses on Friday to settle beneath $105 a barrel on recession fears. Adding to the careful mood of buyers turned into the Marvel delay in the weekly U.S. oil stock document, which said changed into held up by electricity troubles and not likely to see e-book till next week. New York traded West Texas Intermediate, the benchmark for U.S. crude, settled Thursday's trade down $1.92, or 1.8%, at $104.27 in step with barrel. London traded Brent crude, the global benchmark for oil, settled down $1.69, or 1.5%, at $110.05. Crude fees can also continue to be heavy until Wall Street is completed absolutely pricing in an economic slowdown as a way to deliver this economy at the verge of a recession, said Ed Moya, analyst at online buying and selling platform OANDA. Powell reiterated on the second day of his biannual testimony to the U.S. Senate that the Fed had no purpose of deliberately slowing the economy to deliver down inflation raging at over 8% a year, extra than 4 instances its goal. Yet, the imperative financial institution would be reluctant to shift from raising costs to slicing them until it noticed clean proof that inflation changed into coming down in a resounding fashion, Powell mentioned. We can't fail on this. We truly need to get inflation down, Powell mentioned. We're going to need to see evidence that it definitely is coming down earlier than we declare. Undertaking completed. The Fed introduced last week its stiffest U.S. rate hike in 28 years to fight inflation, adding a 3/4 point that delivered key lending costs to as excessive as 1.75% from May's height of 1%. That hike got here after U.S. inflation, as indicated through the Consumer Price Index, grew at an annualized price of 8.6% in May, greater than 4 times the Fed's goal. The Fed's favored rate of inflation is a mere 2% a year, and it has vowed to elevate prices as high and lengthy as essential to carry price boom lower back to its annual target. Economists, however, fear that the vital bank will push America's economy into a recession with its rate hikes. The economy experienced a negative growth of 1.4% for the primary area. If it does not return to advantageous growth by using the second area, it's going to technically be in a recession, given that it takes just 2 directly quarters of negative increase to make a recession. As for the weekly oil inventory facts, as of Wednesday, analysts tracked by expected the EIA to report a crude stockpile drop of 569,000 barrels, as opposed to the 1.96 million barrel upward thrust mentioned all through the week to June 10. On the gas inventory front, the consensus is for a draw of 452,000 barrels over the 710,000 barrel decline inside the previous week. With distillate stockpiles, the expectation is for a climb of 328,000 barrels as opposed to the earlier week's gain of 725,000.